there is less than a month to wrap up 2021. And despite the returns in the markets or whatever they have been so far, I'm still undecided which of these phases represents how 2021 is going to end up. Greetings, viewers. You're watching Aman Sanga, Independent Financial Advisor in Mississauga, Ontario, for my update for the month of November. As always, I'll break it up into three main components. We will start with the major index returns, and which has been a story of the return of the virus. And after that, I want to go into the story. There was a story before the story, which was that of inflation, and just understanding some of the numbers under the hood. And lastly, I want to talk about why I'm so undecided about how even the 1 month of 2021 could play out. So let's get started with the year-to-date returns. And you can see that the bonds, if you've been following these updates, the bonds have recovered some of their losses, and the equities have given up some of the gains. And this is a typical risk of environment, which saw the bonds gain and the equities having losses. And why that was I mean, this is old news right now, was the return of the virus. It just reminds me of the movie The Mummy Returns. And I don't want to be disrespectful for the seriousness of the virus, but just throwing some humor here. It just seems to come back every time we think that it's been taken care of, or it's the vaccinations are doing their trick. It's too early to say how the seriousness of the virus is, what vaccines are needed, when they will be developed, when they will be rolled out, if there will be lockdowns. But we just know that this story is still rolling on, and we'll see how this plays out in the next few months for 2020, in the next few weeks for 2021, and then if this continues into 2022. So without spending much time on the unknown, I just want to go back to the story before the story, which was the inflation story. And what I wanted to do was just peel the layers of this onion a bit and see underlying reason. Like if you look at the US inflation, it was about 6.24% that was reported. And it was reported as a concern. And when you look out as to how these numbers are being contributed, almost half of it, the blue line here, comes from the transport sector, which is primarily around the price of gasoline and the price of used cars, which have jumped because of the used car prices have jumped because new cars are not coming in because of shortage of chips and supply chains and so on and so forth. So there is a lot of disruption that's already causing this inflation to be in place. And now with the virus playing out, that might magnify itself. There's a lot more unknown. So the way this was being addressed through the central bankers was taking back, as the life was returning to normal, the central bankers were thinking about taking back some of the liquidity that has been pumped into the markets. And that's the announcement from the US about the US Fed about taking their foot off the quantitative easing. They didn't mention anything about rate hikes yet. They could probably be in 2022, but with the virus, I think all bets are off. Let's see how that plays out. And if we see this thing in Canada, if you can see, again, this is the orange line, which the Canadian inflation was at about 4.6, and almost half of that is being contributed by transport sector. A large part of it is gasoline, or the spike in gasoline prices that we've seen this year. And this was already in news earlier that there are rate hike plans. The Q is definitely off the table in Canada. So different pressures, different points of the story. It seems to be two steps back, two steps forward, one step back. Let's see how this plays out. So I just want to come back to the last part about why I'm so undecided. If you look at this fear factor, which is the VIX for the equities and the move for the bonds, they have diverged quite a bit. They were moving almost in lockstep earlier in the year. There was a divergence, and they seemed to converge at the start of the fall. But since then, they have moved in totally different directions. I mean, the bond investors seem to be very pessimistic. The equity investors seem to be very relaxed. I mean, this has jumped up a bit, but still, it seems to be more on the positive side, on the optimist side, than it is on the what the bond investors are thinking. Which of these two are right, or they converge in the next few months? It's hard to say. But I just want to conclude by saying that the pandemic story that started in 2022, in March of 20, is likely to extend into 2022. Now, whether it's equities, whether it's bonds, and the impact that that portfolio will have if the rates do start to rise, there is a lot of questions out there. And if you haven't looked at your portfolio or you want to discuss it, you know the number to call: 905-363-5035. With that, I want to say thank you so much for watching. I'll be back with my December update, which will do a kind of a summary or a snapshot of 2021. And with that, thank you so much for watching, and bye for now.